Hi everyone and welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, into this week, a couple of things really big impacting the markets is Greece and the economic data that we've got out this week. Certainly this week, Greece is running up to this deadline that it's got with the IMF. 5th of June is when it's due to repay 300 million euros. Now, there is a little bit of confusion as to exactly whether they do need to repay it on the 5th of June or not. There's an IMF precedent that suggests that they could potentially delay it until the end of the month. However, certainly the Greeks still need this big bailout, this 7.2 billion euros of bailout that it's owed as its final tranche of the bailout accord that it was agreed. And basically it needs to do this so it can pay other debts as well. So in terms of where it's going, last week we had a lot of toing and froing between the Greeks who thought the deal was close, but then the creditors came back on that and suggested, well, the IMF and also the Eurozone suggested that the deal wasn't that close at all. So lots of uncertainty is surrounding this, and obviously the closer that we get to the 5th of June deadline, the more that this uncertainty will pull the markets to and fro. Now, into Friday, the markets got shot to pieces to the downside, and again they're under a little bit of pressure today. So I think even closer to the 5th of June, and the equity markets could come under further pressure to the downside. Interesting that you're also seeing the euro turn lower as well, and also we're now seeing German bond yields which are falling back. They're now back towards the 50% retracement, not too far away from that of the big rally that they saw. So obviously investors are seeing that the German bond is once again a nice safe haven trade to protect against this uncertainty in the Eurozone. So that is having a big impact on the market. So Greece is a big number to watch out for this week. Furthermore, we've got all these economic data this week. A lot of tier 1 economic data out of the States. Obviously the big focus comes early on in the week with the ISM data. Now the ISM manufacturing data has been very much on the downside in recent months and hasn't really risen since October. So it'll be interesting to see if the expected uptick in the ISM data today will have an impact, because certainly the markets will be looking for an improving US economy, certainly considering that poor Q1 it had. And also ending off the week with the non-farm payrolls data. That will always be a huge impact on the market. So lots of tier 1 economic data for the States. Now, in terms of how that's impacting across the dollar, there has been dollar strength we've seen in recent days, and that is again happening today. You've seen the euro lower, you've seen the sterling lower. The big story last week was that breakout on the dollar yen. After months of sideways trading, dollar yen shot higher. So it's interesting that we're seeing this dollar strength coming through, and we're now getting this key tier 1 data. So if this economic data this week supports a strong dollar, supports a strong move in the US economy, that would also help to drive this strong dollar trade. Now, in terms of the forex markets, where does this leave us? Well, obviously euro dollar is now pulling lower, and we've seen a bit of a reversal in this euro dollar trade now. So after 3 days of a rally, euro dollar is now falling again. Looks like it's going to be putting pressure back on the low at 108.18, and certainly if it breaks that, then the next level to the downside is 106.60 area. In terms of cable has been dropping for the past 6 days in a row, and it looks like it's going to be a 7th today. Pressure is to the downside, and it looks as though it's going to be pulling back towards the next Fibonacci level, which is the 50% level of that big rally that it had, and that comes in at 151.89. Below that is the key May low, of 105.88. Now, as I said, that big dollar yen run higher was the news from last week. The run higher seems to be losing a bit of upside impetus, a bit of consolidation, and also some near-term technical indicators are suggesting perhaps the profit taking may not be too far away. I would say that a pullback towards the breakout level of 122 would actually be quite a strong medium-term technical signal, because it would help to unwind a bit of that momentum, bit of overbought, bit of froth that had been built up, and perhaps it would give you a nice opportunity to go long once again for that breakout target, which is 125.70. So perhaps a little bit of a near-term correction on dollar yen, but still a strong move nonetheless. Now, other Forex markets also as well, the Aussie and the Kiwi have remained weak and continue to push lower. So lots of interesting moves there. Interesting also that we've got the RBA this week, so how the markets react around that. Now, in terms of the equity markets, well, the DAX has been driven around the last few days on the back of the Greece story, and Greece again dominating, so the DAX is lower. Breakdown below 11,620 on the DAX was a key level. That was a big pivot level near term, and that now suggests we could well be pulling back towards the big low at 11,167. Now we could see, my expectation is that you're going to see pressure on the DAX through this week whilst there is no Greek deal, but I think if there is a Greek deal that's thrashed out and they announce it, I think there could be quite a significant DAX rally, so just keep an eye on that news flow there. In terms of FTSE, a little bit less volatile, but certainly the FTSE has had a corrective day on Friday, and it suggests that near term perhaps a little bit of downside is going to be seen. The support now under pressure is 6,930. If that's broken, you could well see a test back towards the key low at 6,810. Similar sort of story with the S&P 500. There's no earnings season that's driving the S&P anymore. So so the S&P is looking a little bit more international for its drivers, and that is obviously going to be Greece now. And Greece is just taking some of the steam out of any sort of positivity from that. So near term, bit of corrective move, but again, FTSE and S&P not all that negative yet. They're still fairly range bound. In terms of gold, well, we've seen that dollar strength, which is pulling on commodity prices, but gold is actually holding up fairly well actually at the moment, above that 1178 level, and it's holding quite nicely. Last few days, bit of a consolidation, but none too much in terms of selling pressure. The key thing this week to watch out for on gold is non-farm payrolls. Non-farm payrolls invariably have a big impact on gold, and I think that if payrolls come up strongly on Friday, that could well have a big impact on the bottom of that trading band at 1178. We could see a breakdown, so watch out for payrolls on Friday to impact on gold. So the economic data, as I said, this week is key. So on Monday, we've already had the Eurozone PMIs out. Pretty mixed bag there on the Eurozone data, but the ISM manufacturing data is the key number that we need to look out for, as I said earlier. On Tuesday, we've got the RBA, which is going to give its economic monetary policy update as well. So considering how much the Aussie has fallen in recent weeks, the market will be certainly focusing on any sort of rhetoric from that RBA statement. On Wednesday, we've got the services PMIs again throughout the world, so that will be driving data, driving the markets throughout the day. The OPEC meeting as well, that is going to have a big impact on the oil price. Any sort of rhetoric out of that meeting will certainly be a big driver. And also, we've got the ECB monetary policy. And focus there will be on the fact that how the ECB is coping, being able to front load the QE purchases that it said it would be doing in May and June. So interesting to see the update on how that's progressing. On Thursday, we've got the Bank of England monetary policy, and that Bank of England monetary policy is still, again, not likely to do a great deal. It's still likely to be a fairly neutral impact on the market, because investors pretty much know that the Bank of England is not going to be cutting quite yet, and the meeting minutes will be far more interesting in a couple of weeks' time. And finally, payrolls on Friday need to stay above 200,000. You'd imagine. Certainly, the move last month was a positive for the market. However, the average hourly earnings need to be picking up, and again, they're going to be forecast to come in around 0.2% on the month, and that's around about 2% growth for the year. So that needs to be higher for the Fed, you'd imagine, to start thinking about any sort of rate hikes. So lots of economic data to drive you throughout this week, and I wish you good luck in your trading, and I'll speak to you again next week. Thank you.